Hello and welcome to the BlockSolid podcast, where we talk about the evolution of the property market, the newest technologies that enhance and revolutionize the world of real estate as we know it, and how we, the owners, the buyers, the renters, the investors, and the entrepreneurs can benefit from it all. I'm Yael Tamar, CEO and co-founder of SolidBlock, a pioneer startup in real estate tokenization, and I'd like to welcome Edward and Nwokedi.
Hello, Yael. Thank you for inviting me.
For sure. I've been wanting to talk to you for a while, and especially since RedSwan has been tokenizing all these great assets and we're kind of in a similar space. So really interested in several things today. One, your background and how you came to be in real estate and in real estate tokenization. Number two, RedSwan, what it does, how it does it, what kind of assets you're tokenizing, what kind of things you're seeing in the industry. And number three, kind of discuss together where the industry is going and hopefully get to some really interesting insights. Is that okay?
Absolutely. Looking forward to the discussion. Thanks for inviting me.
Absolutely. So Edward is the founder and CEO of RedSwan, a digital marketplace of tokenized commercial real estate. Do you mind giving us an overview of kind of your career path, which I think is super interesting?
Oh, let's see. So I graduated from University of Michigan as a CPA accountant. I had my CPA, worked at the Arthur Young and Company back when it was a Big Eight. I hated it. I was bored with accounting. But my family is very traditional that you have to be either professional, either a doctor, engineer, accountant, or lawyer, or a bum. Those are the five options. I chose being an accountant because bum was not going to be something my father was going to appreciate in our household. And I started into accounting and, like I said, didn't really like it too much. It was a great education for business. And I think it served me that well and knowing how to understand business and reading financial statements. But I quickly left and went off to California and ventured in my own to try to find something else to do. I worked in the stock exchange as a runner for a while. I landed a nice job with GE Credit doing asset-based financing, which was a lot of fun. And then from there, I decided to kind of venture out into my own business and wasn't sure what I wanted to do, but I kind of left GE and started writing business plans for a living. And that went really well, saved up a lot of money over a summer. And then I saw an advertising in the paper for a body shop to be sold. And, I figured, I'm from Detroit. I like cars. How hard could it be? Let me see about buying this body shop. Long story short, I was able to acquire this shop with the meager prop funds that I had and a little bit of funds from my parents. And that was my first, private business that I owned as a 24-year-old. And
wow.
Really enjoyed it.
That's really cool.
Yeah, it was exciting business. It was really brick and mortar, to the basis of brick and mortar, where you have customers coming in and cars coming in. You repair the car, and insurance company pays for it. It was a very lucrative business. I provided a lot of good cash flow for myself and my family. And I started to expand that business because, one wasn't enough. So I started to acquire other body shops with the same manner. At the end of the day, we had 7 locations in the Northern California market. And one of those were on a naval base where we took down a hangar for the Navy for airplanes. And we were painting planes and tanks and buses and major industrial equipment like that. And then it got to a point where it was time to either grow or sell. And because I couldn't get financing from banks because I was just too young and too green, they didn't think that I was creditworthy enough to give me a large loan. So I wound up selling the property, splitting the business up and selling it off, some to my senior managers and others to new people into the industry. I figured, well, I'm still too young to retire. I had a buddy of mine who was a lawyer, Wilson Sonsini, and we played golf a lot. And we were talking about the body shop business and how interesting it was, but he was talking about all the new startups, Google, all these new startups they were doing at Wilson Sonsini, and said, you know what, I think there's a business plan here with the body shop business. And we decided to write a business plan for a logistics service that was online for the industry. We presented it to our first investor, which was one of the, Sand Hill Road VCs. I'll leave the name off right now, but our first meeting, they wrote us a check for, I'll never forget that. We had a meeting, didn't even have a business plan. We just told them what we were doing. And I guess based on the relationship, they wrote us a check for $1.5 million and said, go turn the lights on and go write your business plan. And wow. So that was the start of that business called carstation.com. From there, we kind of kept building the business. We hired about 210 employees during that time period. We raised from that 1.5 turned into $95 million. And then we had a successful exit to a Fortune 500 company just before 2000. I figured, okay, it's time to retire. and go back and relax a little bit. But that only lasted for, I would say, 5 months. And I was looking at opportunities, and my mother asked me to come to Texas, which is close to her. And I thought about it. I came to Texas and started looking for another business to buy, and started to talk to business brokers because they were the ones who had the network on business opportunities for sale. And that led me to another opportunity, which was working for a business brokerage firm. And at that point, I figured that I can either buy the company I like that I see, or I can sell it and make money from it. So those are the two, I thought, very positive options. And I worked at that company for a while, brought in a lot of business. And the owner looked at me and said, you really, even though I love what you're doing, this is not the place for you. You need to be with one of those big commercial real estate companies.
Right.
And I didn't even know what the commercial real estate companies were. I said, well, which one you recommend? And the guy gave me a list and said, hey, here are the top 50, any of the top 50 you probably be good at. So I tore the list in half, took the top 10 and started knocking on doors for the commercial real estate companies, and was immediately hired on with Cushman, with Colliers International.
Nice. Mm-hmm.
As a commercial real estate broker. And that took off. That was really a great business because, you got to meet some fantastic client-owned properties. And I learned a lot about the commercial real estate business. And then from there, Cushman Wakefield saw me as a rising star. And they offered me made me an offer I couldn't refuse to kind of join the Cushman Wakefield team. And that brought me over to be the executive director of capital markets for Cushman Wakefield, and which I could do sell properties. Yeah. So it was a great career. And then, from there, I saw the blockchain and got hooked on the blockchain. Yeah, it's just something clicked right away. I went to a blockchain conference, and this is because one of my CTO of my previous company that we sold told me I need to go to Dallas to a blockchain conference. And I'm thinking, I have no time for that. I had no idea what you're talking about. And nope, I'm not going to do it. But he begged me to go. He says, I know you very well. You're going to like it. Just go. So I jump on the plane and go to Dallas and go to my first blockchain conference. And right away, I started going to all the exhibits because that's where I can figure out what's going on. And I saw what they were doing with the technology. And the first thing that clicked in my mind is that, wow, this will be great for capital markets, right? If they ever can figure it out, be able to take something and divide it into the number of shares and sell it to open market, be excellent for capital markets. Just later on that year, the SEC here in the United States declared that ICOs we banned. You probably know about that. I banned ICO from the United States and declared them illegal, but they made an exception that security token offerings would be legal. And so that was the, shining moment where I decided, you know what, I think this is going to be the future, and let me, kind of make a transition. So I started transitioning from my capital markets experience as a broker and went on to start my own business at RedSwan. People really thought I was crazy. Because they couldn't even pronounce blockchain, let alone know what it was. And if I'm going to leave a very, very cushy career doing exceptionally well to go start up a company in technology that no one even understands, I must have either bumped my head or just, something happened. But I decided, it was a good time, it was a great opportunity, and I didn't have much to lose. I already had a very strong career, saved up enough assets, and it was just a good time to make a transition.
Oh, for sure. I mean, there are quite a few things that I heard in this fascinating story. Number one, you know how to identify rising trend, right? So, and also your own kind of strength and capabilities in the environment, right? Detroit with cars, Houston or Texas with real estate, and identifying, understanding the power of blockchain, which, by the way, same thing happened to me. Well, I didn't go to a conference, I would say, but I had a marketing agency and I had to send money to people, and I learned about crypto first and as a way to do it. And then from then on, I learned about blockchain from a friend of mine who was advising banks, and I have a background in finance and needed somebody to help him. And so we kind of joined forces. But once you understand the technology and where it can go beyond, or back in the day where it could go beyond the crypto market, you kind of see, wow, whatever I'm doing today can be enhanced with blockchain, and whatever I'm going to be doing tomorrow can be enhanced, with blockchain. So that's really cool. And then one more thing that I kind of want to go further and deeper in, it seems like you have uncovered the formula from, say, identifying a successful business or direction and then growing it according to certain milestones or certain methodology until it can be acquired, right? And like from writing a successful business plan to implementing it. Is there something there that you can share from your life story and from your career and approach that could be useful to somebody who wants to kind of create their own RedSwan, maybe in a different industry?
No, that's a really good point. I'm glad that you actually were able to summarize that into really the specific, I think, skill set that helped me, which is sort of, first of all, having the accounting background, you understand how to understand numbers. But I think, like I told you, I started writing business plans when I left my first job with GE Credit. And writing business plans is important because when you write a business plan, you write a roadmap as to where you want to go. And if you just follow the roadmap consistently, you're going to get there. Of course, you make some modifications to it, but that really taught me how to stay focused on a business and take it to from the beginning to the end and know where you're going. So every point within your journey, you can see, I'm right here. I still need to go here. I need to do this. So waking up, you always had tasks and things to do in order to get to your final destination point for the business plan. So I think that was really one of the key skills that I acquired over time, was to write a business plan that can lay out, where I'm going and then how to get there.
Wow, that's really cool. And so then you don't really have a room for error because you have, kind of the definition and you narrow down your activity.
Well, you definitely have errors though, because things don't always work as planned. So you have to go to plan B, or you have to kind of work around this, but you still have the end goal. It's just sometimes the strategies might change because, for example, in this business, we thought it was going to take off right away. And that because it was such a smart tool, everybody take it right away. People will get it. But it took a long time for people, and it's still taking time for people to understand what we do. And they don't get it. So that was something.
What do you do? Tell us about RedSwan.
Well, we tokenize assets. We tokenize real estate. We democratize the process of investing in commercial real estate. I think one thing that cryptocurrency has done is made people skeptical about centralized transactions, centralized companies, banks holding your money, brokerage firms holding all your assets, your stocks, and making all the trades on your behalf. I think once you decentralize and realize that I can do this myself, I can save a lot of money, I can probably make better transactions, I understand what I'm doing, I'm actually teaching myself. That became the way that I saw business, right? And I think that that's why tokenizing commercial real estate allows a property owner to take a piece of property they own, which most of the time they have debt associated with that property if it's commercial. And usually that's roughly 35 to 40% of that asset value is their equity in their property. And if you think about it, that equity is trapped from the time they buy it to the time they sell it. So many times you see property owners, they're actually asset rich, but cash flow poor, right? They have $2 million worth of assets and they have $800,000 trapped in that asset. And maybe when they generate more revenue, they put that net profit in their pocket or share it with their shareholders. But that asset base of 800,000 continues to grow to $1 million to $2 million as the asset grows. But think about or imagine if they were able to take that $800,000 out of the property, still own the property, so it's still generating capital, but put that 800,000 into two more properties, they would grow that much faster. So I think that's really the benefit of what the blockchain and tokenization can do for property owners, but as a primary benefit. But you also have to look at the investors coming in. You were probably investing in real estate just like I have been investing. And you're a silent investor. You're not in control of the asset. You don't know when it's going to be sold. All you can do is beg for your dividends or profit sharing at the right period, and also hope the value continues to go up. But having your money trapped in the asset as an investor is also negative because, if you change your mind, you have a life experience that requires you to generate some quick cash, you can't liquidate your real estate assets and get your money out. And that's usually a deterrent from people who want to invest in real estate because they know it's illiquid. So I think the tokenization handles both of those benefits in a very transparent and easy way for, I think, property owners, sponsors, as well as investors coming in.
Yeah, absolutely. So who are these clients that you have? So you're a two-sided marketplace, right? So you have some assets and you also are onboarding in real estate investors. Exactly.
So the clients they started off as clients that I knew that I worked with in the old way of doing business, which is doing our regular business brokerage. But they're really property owners who own assets around the world that are looking to figure out a way to enhance their balance sheet even more by pulling out some of that equity that they have in their property. And like I said, being able to either pay themselves back, diversify it in other assets. So that's where they are. They're just property owners who are looking for a new way of generating equity.
Wow. Yeah, that's exactly it. So you said that things didn't turn out exactly as you expected. Did it take longer to educate the market, or was regulation a hurdle? Tell me about how you reached the point where you are right now, where I understand you have over $2 billion in assets under management tokenized.
Yeah, we've actually crossed $4 billion of assets of tokenized, but it's exactly right. I mean, the headache initially was trying to describe to the average owner, who I would say is on average of 58 years old, if not a little older, they should use blockchain technology to enhance their capital market position. Mm-hmm. That was like, shooting them in the gun in the head because they totally didn't get it. They totally thought I lost my mind because I'm speaking about something that is intergalactical, and then convincing them that they need to do this now because things are changing so fast. So that was the challenge that we had. But I found that most of the initial customers that we talked to and were able to get to tokenize their assets just believed in me because I, was successful as a broker, made them a lot of money. So they figured, if you're intelligent, you ask me to do this, I will take a chance on some of my assets and allow you to do this process. The worst thing can happen is that you just take it off, right? So I can say there's no downside risk. There's only upside risk. If Ed's crazy, he's putting all his time and effort into doing this for very little capital or very little revenue. So my downside risk is I lose a little bit of money that I gave Ed. And what happens, the upside is that he's right. And he's right again, I should say, and things become successful for me.
Gotcha. So how do these investors that invest see liquidity, or how do these asset owners see liquidity? Are there some secondary markets that you're working with?
Yeah, the liquidity is a cat and mouse position right now because we talk about it as if it's automatic, but we all know that it's not automatic. We know that liquidity comes from a secondary market, which means that you're able to take your shares that you own right now and put it on an exchange so other people can bid and buy it, right? But there are exchanges that are there for liquidity. We have exchange we're working with. However, there's not a lot of activity on the exchange because there's a lot of assets tokenized, right? Let's look at this New York Stock Exchange, for example. If you only had one company in the New York Stock Exchange that had shares on the exchange, it wouldn't be as heavily traded as it is today, right? Just because the volume is not there. And I think that that's what's happening with our industry right now for tokenized assets. Once we start seeing more assets get tokenized on chain, then you're going to have the demand for people who need to liquidate for one reason or another and get out. You were very successful in bringing on one of the first tokenized assets, which is the hotel, the Aspen Hotel, right?
Yeah.
And even though that's on an exchange, the activity of trading is not that heavy. It's not, the volume is not that great. And I think the mindset of that is that the investors who bought in really like that asset and they don't want to sell their shares. Exactly. Which is really the mindset of real estate investors in general. Is that I'm going to hold this because I like it. It's going to growing. I'm proud of it. And so I don't need to sell it. Right. And so that's okay. We're not promising that liquidity has to happen. We're saying that by tokenizing, you have an option for liquidity that you never had before. Right. So if you decide that, there's somebody's getting married and you need some capital and you can sell off some shares to raise some cash to pay for the wedding, you can do that. If you have all the alternative sources for that cash without having to sell your shares, then you can do that as well. So liquidity is not an absolute. It's just an option that people can have. And I think it's better to have an option for liquidity than to have no option at all.
Right. That's amazing. Yeah, absolutely. It definitely helps to have an option. And, if you have this structure that allows you flexibility, you can probably have a few more interesting things you could do with a little knowledge of finance, right? How you can employ market makers and how you can add structured products on top of that, right? So at the end of the day, how do you see this industry moving forward? What do you think is going to be the most interesting kind of trend in tokenized real estate? And you've done asset-backed finance before. So actually, I'm very, very interested in understanding where those two intersect, tokenization and asset-backed finance.
Well, I see a lot of activity. We're trying to get our arms around a lot of things in the industry. I think financing of the collateralized real estate shares or collateralized loans, what we call decentralized financing, is really just finance. And I think you're going to see that with real estate shares. Why? Because the world is, and all the banks are very comfortable with financing real estate because it's one of the most secure assets on earth. And so I think you're going to see an evolution of that. And I also go by the thesis that once you and I have done our job and tokenized all the assets around the world, all that's left now is trading shares of those assets. You won't see whole assets trading anymore because the sponsors have already tokenized 90% of the ownership of those assets, and they're now in the public market. So there's no reason, no motivation for them to sell those assets right now. They're in a GP position. They're getting GP upside promotes from owning that asset with very little equity in it. And then all the shareholders are buying in and out for their representative share of the profits. So I think that in the future, you're going to see all assets tokenized. You're going to just see people buying in and out of shares based on the type of portfolio and the type of assets they're looking for. And they'll be going through exchanges to make that work.
Yeah, super, super interesting. So tell me, Ed, what is, in your opinion, waiting for us on the other side of this crypto winter? Do you think that, or even real estate, right? Real estate's now experiencing some sort of a shift in prices. Inflation is very high. At the same time, Bitcoin and other crypto is down. What are we going to see now in terms of tokenization demand even, or securitization demand, liquidity demand for assets? And what do we expect to see once things kind of improve and go back to normal?
There's a lot there. Let's start with where do we see the digital asset space future. I just came back from the Digital Asset Summit in New York last week. Just give you a comparison to that event versus like my first event, which was Consensus in New York back in 2018. The whole world was all about cryptocurrencies, and they were all about buying crypto and trading crypto, and crypto was the next best thing. And you couldn't talk about anything else. We couldn't talk about tokenization. That was like, that's boring. We mean 8% for 15, 20% returns. That's right. Nothing. Boring. We don't want that. So it was all about cryptocurrency. But this past week at that conference, I was really shocked that all these cryptocurrency companies and all the infrastructure built around cryptocurrency is now looking for what's next, right? They're now trying to figure out how's the SEC going to mandate or regulate the cryptocurrency world? How are they going to get involved with the DeFi that's out there? Everyone's a little bit nervous about that aspect of it. And at the end of the day, they're probably all going to have to find some new form of regulation to operate. So all these companies, they're built on cryptocurrencies, trading and doing that, are figuring out now how to face up the SEC to be compliant so they won't have a problem with getting fined or going to jail. And so on the other hand, they're also looking at digital assets in terms of tokenization and NFTs and how we can get into that space, because at least that's something that's durable. That's something people understand, something that's not as volatile. So I can just see the big shift in the momentum from that last conference and from what I said in 2018, when it was all about cryptocurrency. So I think you're going to see more interest in where we are in the digital tokenization space.
Yeah.
Why? Because if you're head of Charles Schwab or Fidelity and you have to sell a product to hundreds of millions of customers, would you want to sell something that is very, very volatile, that can go up and down in 2 days or a week and be wiped out? Or would you feel more comfortable selling something that they already understand, which is real estate that doesn't go up and down, that actually hedges against inflation and is very stable in terms of an asset class, and is also a rare asset class that can't be manufactured? I think the latter is what people are going to be more comfortable with. And so I think that's where the whole industry is starting to head. And you've probably been reading all the headlines about all these major institutional companies talking about tokenizing their assets.
They have been tokenizing, I think from what I've calculated and by adding it up, I would say over $1 trillion or even more, right? But these are kind of MBS portfolios, like very big aggregate products, right? That's why I'm thinking structured products here. But my biggest issue with their type of tokenization, as opposed to, and we need to talk, by the way, about your tech stack, but they're working in a very siloed environment where they will tokenize either over JP Morgan's blockchain, Onyx, or some other internal technology or an internal network for the purpose of transfer from one bank to the other. And there is no democratization there. And, that's one of the things you mentioned first when you talked about RedSwan. And I envision a world where, even if bank tokenizes, an investment bank or a large insurance company will want to tokenize their portfolio, why not offer that to your clients? It's kind of like what you said when you sold your first business or, one of your first businesses you bought, you sold it to the managers because they know it. They work there. They love the company. Why not? Right?
They
Just sell
deserve
it.
it.
Yeah, right. Just sell it to the clients. And sometimes some countries don't allow that for regulatory purposes, but the more opportunities you give to the markets, I think the more it will surprise you in terms of giving you good returns and good liquidity. So that's what I would like to see from these institutions tokenizing. But yeah, you're right on the money. We kind of have on the one side all of these institutions tokenizing. On the other side, we have smaller asset owners because they know they need this, right? Because they're very low in liquidity. They need the money. And then the big guys, they like to reduce the costs, right? They like to lower the cost of securities offering and flexibility and things like that. And I find it fascinating about RedSwan and what you're doing, Ed, is that you seem to find a way to entice these mid-range, right? Where the majority of the market is and where probably the majority of the benefit is, right? These asset managers and asset owners of commercial yielding real estate.
Yeah, you're absolutely right that the institutions are keeping it siloed, controlling it, using it for their own benefit to reduce costs, make higher profits. But the nice thing is they're publicizing that they're doing it. They're showing that it's safe. They're showing that it's secure. They're showing they're making money off of it. And they're making the lower level property owners understand, it's not dangerous. It's not Bitcoin. It's not, speculative. It's not volatile. These guys are using it. Therefore, it makes it easier for us to be able to sell the same service to a private owner that wants to tokenize a smaller, more private portfolio. They understand the concept. So I think that these big companies doing it for themselves, for their own internal operation is still good because they're doing it and they're exercising the technology in a way that you and I can explain it to someone who's not as sophisticated. And I think they're also going to start opening the door to allow, like you said, employees or people they want to incentivize to be able to buy some of these shares in a very efficient manner as well, which is kind of what we're doing on our level. So it doesn't hurt. It only helps to have the bigger institutions getting involved in exercising the blockchain for digital tokenization.
Yeah, absolutely. So you are using Polymesh, or what kind of blockchains are you using and what kind of tech stack are you using?
Yeah, we use Polymath and we haven't moved over to Polymesh yet. That's kind of their private enterprise, just because it's so private that it's not connected to anyone else yet. And you kind of need to have that platform so that you can be agnostic about protocol. But we did use them for tokenizing our first batch of assets, and we continue to do so just because the ERC 1400 is a really good protocol for the SEC standards, right? And that was one of the reasons, the main reason why we went to them, is that they were early on, came out with the ERC 20, ERC 1400 standard, which the SEC kind of says, yes, they have the restrictions and guidelines embedded that the SEC feels comfortable with. And so we want to make sure we're working in accordance to the regulations that are out there. This is why we use that. Now there are other options that we can use. And now we're looking at options that may be more affordable to customers so that the cost for transferring won't be as expensive. And also
transferring their securities from one another.
Exactly. Yeah, exactly. Transfer on the blockchain with, of course, with Ethereum is more expensive in terms of gas fees. Not sure how it's going to be with the new Ethereum, but at least how it has been, it's been more expensive. So it's okay to have those expensive gas fees when we're selling $5,000 or $100,000, because as a percentage, it's very small. No matter what the gas fee, it's still a very small transaction fee. But imagine if we're now selling shares overseas to Vietnam, to Africa, to Asia, to India, and the average buyer is buying $50 worth of shares instead of 500 to 5,000, right? The gas fees for them is very significant. And when you look at the size of these populations of these types of investors, they're very extremely large. So we don't want to leave them out, right? So we think that cost is going to be important for the future of tokenization.
Amazing. So what really are the costs for tokenization in general terms today? How much do people expect to pay, or, comparatively maybe to traditional securitization?
for the sponsor, the property owner, the costs are relatively minor, right? I mean, for them to pay $50,000 to $100,000 to tokenize a $80,000 asset and now make it liquid, that's a drop in the bucket, right? And when you compare that cost to, even getting a loan in our business, when we did mortgage financing for apartment building, to assign that to any one of the Northmark, any one of these credit brokers out there, their initial initiation fee or engagement fee is going to be relatively the same percentage as up to the size of the loan, right? So everyone expects to pay a fee to get set up. And I think that tokenization is no different, especially since you have a lot of legalities behind it to make sure that's right. You have a lot of tech behind it to make sure that's done right. And you have also the expertise of the broker or the real estate professional to understand the structure of the deal, right? So you don't just tokenize and create for nothing. You've got to have a structure and a plan. And that's usually somebody puts together a why to how to solve that solution for the owner that they're trying to solve. Would be to raise new capital in a sequence of tranches or to raise capital with convertible debt. I mean, there's all types of different solutions you can create. And I think that's where the advisory role comes in to help sponsors determine what's next.
Interesting. Yes. So there is a possibility for an asset owner, let's say, to come and actually raise funding or not only bring their own investors.
Sure. That's exactly why they come to us. They're looking for an alternative capital source that they can't get right now, especially in times like today when, no one is talking about, but real estate is kind of in trouble, right? Interest rates have been going up quite a bit, and we're going to go up probably again this month, which means that when interest rates go up, cap rates go up, right?
Yeah.
And when cap rates go up, prices come down, right? So people who have bought real estate over the past 2 years and were paying, rushing to buy it to get that price and get that deal and paying below 4% or even below 3% cap rate. Well, if cap rates now are averaging around 6 to 7% for the same asset, they just took a big haircut in value, right? And not only that, you look at the bank who put the financing together at 3.5% cap rate at a 75%, even 80% LTV. Where are they now when the cap rate has gone up to 7%? And now their LTV is over 100%. So the bank actually owns all the asset because all the equity is gone. So these are the reality that no one's talking about right now. But I see a significant need for capital on these properties. Think about when the same owner who bought 3 years ago on a floating loan, which is basically to do value add, and 3 years now it's due, he has to go for a permanent loan. And rather than the loan be 3.25%, it's going to be more like 7%. The bank is more likely going to ask him to bring cash to the transaction to make sure that the LTV is in line. And I think that's going to be more like 60, 65% these days. So that's going to be a wake-up call for the owners. Where am I going to get that equity to be able to recapitalize my property with a new loan when the bank's requiring I bring cash in rather than take cash out? Well, you can't go back to your investors because they're already pretty much diluted with their equity. So where are you going to go? You have to try to buy or get some money from the public markets.
Absolutely. Wow. That's such a great point, especially, for anybody who's looking to raise funding in the next year or year and a half, and they want to evaluate all kinds of opportunities, right, for doing so. And definitely would love for everybody to come and check out RedSwan. Where can asset owners and investors find you? How can they sign up?
Yeah, thanks. Good question. They can come right to our website, www.redswan.io. We have a link where you can submit your property. So if you have an interest in property to be submitted, you can click the link, fill it out, even send your offering package on that direct link so that now our underwriters and our sales personnel will be able to look at that and try to size up the asset and give you a phone call to discuss, a solution to your capital stack. So that's one way, but you also can reach me on LinkedIn. I'm all over the place, and just use my name or RedSwan on LinkedIn. That'll get you right to me and leave me a DM, and I'm happy to help that way or pass you down to someone in our team that can help underwrite the asset.
That's for sure. I love it. Is there anything else that you'd like to share with our audience before we wrap up? It's been a super interesting conversation.
Yeah, no, I enjoyed talking to you. Talking to someone who understands the industry, knows what we're doing, has the same forecast, I think is interesting. I'm curious what you're doing. I mean, how do you see the industry and where do you see solid blocks in terms of, the next 5 years for tokenization?
So just like you, I kind of always look for where I can bring my experiences in my career and combine it with, the tailwind, which is the industry, right? Blockchain is the tech that facilitates a transformation, right? Just like we had digital transformation back in 2010, right? Where all the corporates moved to the cloud, for example, right? And even 10 years before, everybody moved to the internet, right? Before then, people used to communicate in different ways than they did after the internet, right? And so blockchain came, and that's a major tailwind for transformation. And I'm more or less a transformation professional, even in finance, I guess. I have Wall Street background, M&A, private equity, and then structured products for many years. So for me, when I kind of joined the blockchain movement, I was more or less helping out ICOs with strategic marketing in the first year, 2017. And then just like you, I realized that this is over. And then we need to find a way to apply blockchain to the STOs. I created a company similar to Solid Block, found Solid Block through the use case that you mentioned, the Aspen coin, and joined Yuval, my co-founder, at Solid Block. And he brought in tech expertise, and I brought in more of finance and marketing expertise. Both of us did real estate on some level of mainly, single family homes investments. And at that point, back in when was it? Like back when we started the company, Yuval started in 2018, I joined in 2019. I drew a map of where I think the industry is going to go and which products we're going to develop. And interestingly, we are actually going hand in hand with that roadmap. And what we had on that roadmap was just kind of educating the market 2019 and tokenizing and doing a few more proof of concepts after the Aspen point, and really developing a platform. So we're slightly different from RedSwan in a way that we're no longer a marketplace. We did start as a marketplace, but then we saw some fantastic marketplaces like you guys, like a crew. And then we said, okay, why don't we actually originate tokens, mint tokens, and really focus on technology, really focus on smart contracts and all the aspects of real estate contract, from the investment to, dividend and interest, to payouts at exit, to compliance. All of these things really are contracts, right? Even compliance is a contract. We're only going to sell you if you pass KYC ML, right? That's a contract. So all of that we are basically wrapping into blockchain smart contracts, creating interesting scenarios and algorithms. Again, for GP equity, you mentioned that the asset owners want to exit, but you don't want to allow asset owners maybe to do whatever they want for the fear of losing skin in the game that they have, and to provide people or investors with, a good service, right? So there are all kinds of things that we're doing in smart contracts and the tech. So we're really focused on the tech. We're a tech platform for asset owners. And then we have brokers on the system that will sell, and then we plug in our tokens into other marketplaces where they can raise funding. So our role in the market, our role in the supply chain today is deal flow on the real estate side, and technology, of course, that we're soon going to be providing to also other parties, maybe as a white label or in general as a plugin to come and be able to mint. So that's where we are. And I started talking about the roadmap actually. So the tokenization as a service or as a platform is what we started with. Then in 2021, we started working on collateralization for lending. And so we're still working on the approach and the methodology and the technology that is going to be compatible with a variety of DeFi marketplaces, loan marketplaces, and then also the lenders now that are employing more and more blockchain technology to connect between lenders and borrowers, or to originate loans, to distribute proceeds and dividend interest payments and loan servicing and the rest, right? So it's probably going to take us another 12 months to polish this product. And then for 2022, 2023, we allocated the plan of building structured products. So indices, ETFs, things like that, really creating a much more superior approach and what we think is going to bring liquidity to individual tokens as well, just like the regular capital market does. And there beyond, we have a plan to do fractional underwriting on top of fractional investment.
Awesome. I mean, so it seems like that there's a synergy within what we're doing and what you're doing. And, it seems like you're providing some advisory services to blockchain sponsors, as well as companies are looking to use blockchain in a unique way. But, one company can't do it all. Everybody has their own level of core competence. And, learning about the new technologies, the new way of doing business, the new way of putting together smart contracts, how to take assets that we have and combine them into certain other types of strategic products that can be sold, wrapped, issued around the world is very interesting to me. But, you got to walk before you can, or you crawl before you can walk. And so it's good to hear that you're doing these types of things in the blockchain industry, because I think that's where it enhances the industry to a whole different level, because the ABCs of the building block are, not too hard, but taking that information and then also creating new and more efficient processes that serve the needs of customers, I think is very important. I'm actually very, pleased to see and talk to you for the first time, because here we are, two minorities, you being a woman, me being African American, in the space and really leading the space in two different aspects of it, right? Who'd have thought? I'm wondering how that has been for you, because I wonder if it's a similar.
Yeah, I'm wondering how it's been for you as well. But, it's interesting because I never really thought about it so much, until the statistics screams at you, just in a general entrepreneurship, and then even less women in fintech or finance, in fintech and financial services platforms, and then even less in crypto, even less in blockchain. And then, you are really a minority at some point. But for me, sometimes it's empowering because you do come into a room, you stand out and people listen, and it's exciting. On the other hand, there's always the biggest challenge in general in being a minority, I think, in entrepreneurship is the availability of capital. Just because there are very, very few kind of connectivity and network, or less connectivity and network opportunities for minorities. And I have to say that we've been really lucky to have a few investors that really focus on that. So one of them is a group called Angels. So it's an angel group that specifically focuses on, women, racial minorities, gender and sexual minorities. So we really like what they do, and they really push the boundaries. They offer services to help bring board members that are from the minority backgrounds. And so, we're actually in the process of doing that for Solid Block, and I really recommend, they do that for everyone. And if anybody here is looking for investment, be happy to speak about our experiences. But what about you, Ed? What did you experience as an African American in the space or in business?
Well, business to me a lot of times doesn't have a color, but the reality of it is that people do see you as in color, right? But one reason why I got into blockchain as opposed to other brick and mortar businesses, because I don't have to be front and center client facing every day. The technology, the business kind of works on its own. I can stay in the background and just, kind of move the levers. But I think one of the biggest challenges is capital, of course. I mean, there's not enough capital because, they pretty much look at who they want to look at for providing capital. And I think we tend to be, in terms of African Americans, underestimated, right? Assuming that we cannot do what others can do, or as well as others can do it, right? So I'm always underestimated and I don't care what business it is, but you just have to prove people wrong and take back and look and say, wow. And even then they think, that's because of this or that's because of that. It just can't be because you're good, right? I think things are changing. I think that proof is proof, and you've proven that, hey, look what you've done, look what you've created, look what look what you're presenting, and look what I've created, look what we've done. Team we have, it's not just because of me or color, it's just because it's a good product and we know what we're doing. We're both smart, right? So I think the world is starting to get connected to that. I just think that, people have to let go of some of their norms that they have in terms of only this is going to work. A great example is that, this Adam Newman investment, right? It just came out, right? With work, right? I mean, so I think everybody deserves another break. And I think it's great that, the guy has skill, and I'm really happy that what has happened to him. But think about all the people, minorities, women, people of color that have great ideas, have good businesses that are running like ours, who just get overlooked, right? It takes him to come out and put the stake on the ground and say tokenization and blockchain future, right? And all of a sudden, just that concept statement is $1 billion valuation, right?
Yeah.
So we've been working on it since 2018 and beyond. And it wasn't $1 billion valuation, it wasn't even thought about until the person says, hey, you know what? This is going to be the future. That's good though. Just raise the bar for all of us.
It is for sure. So I had on this podcast my friend Hill Harper, who's beyond being a famous actor and African American, but also, apparently a writer, a director, has so many different accolades. So he founded Black Wall Street, kind of education and investment platform specifically geared at African Americans and possibly other minority groups. And so I definitely see not only like our responsibility, not only in kind of making it, like you said, the best revenge is really to make it and to make it big, right? But also, kind of take what we know and really encourage and create opportunity. So we've been looking for opportunities in the affordable housing sector and in general models that enable, democratization, not only for those that are actively going out and seeking real estate investment, but also those that are living, in a certain tokenized property and giving them an opportunity to participate and own a fraction of their home if they can't own their home. So we've kind of been looking at those models. They're not necessarily the focus of our company because you said, you have to have a business plan and then you kind of, need to follow that path. But we do have capabilities as a platform to bring maybe third-party developers or anybody who's passionate about kind of developing something in a specific space on top of our technology. Happy to collaborate on that as well.
No, absolutely. You mentioned that. That's really a good point because one of the things I like about the blockchain and tokenization is that it is empowering, right? And, being in my position, there's a lot of people that I need to pull up, right? And a lot of expect to be pulled up. And I think that we're now making it easier for the average person, the average, somebody to be able to put $10, $50, $100 into a piece of real estate and start climbing up their net worth. We opened an office in Lagos, Nigeria, specifically because of the disadvantage they have to capital, right? Lots of intelligence, lots of talent, but very little capital and declining currency base. But if they can now take their savings they get, whether it be $25 or $50 per month, and roll it into, a building on Wall Street, right? And own just a fractional share, at least they can count on that fractional share to have strength and value rather than devaluation of their currency, but also be able to democratize properties in that country to allow people to start investing. And one thing we're looking at in terms of impact investing is helping those developers there who are trying to find affordable housing for the masses of people who live in that country and be able to finance it with outside capital. Not many people in the United States and probably around the world even know their development projects that they're going on right now in West Africa for building housing in the core cities, right? But if it's on a platform like ours or on yours, and they can now see it, they can contribute $25, $40, whatever it is, to make that happen. And I think this is the power of what we're really doing.
That's really cool. Well, Ed, it's been really a pleasure, and I appreciate your time, and I wish we could continue, and we'll do one more of these, right? We'll do one more. We'll do a follow-up.
Absolutely.
Yeah, so I hope everybody checks out RedSwan. And thanks for joining me on the BlockSolid podcast today, Ed. Great having you with us. You can find us on Spotify, Apple Podcasts, or by visiting our website at saoblog.co/podcast. If you enjoyed the show, don't forget to rate and review and spread the word. Thanks.